Everyone thinks AMD stock is going to explode because of AI chips, or because they're finally catching up to Nvidia. But what if I told you, none of that is what will make AMD a trillion-dollar company? Because what really sets AMD apart, what truly gives it trillion-dollar potential, is something almost nobody's talking about. I've been investing in the markets for over a decade. I've made millions spotting inflection points before the herd. And right now, AMD is hitting one of the biggest I've ever seen. This isn't just a chip company anymore. It's on the verge of becoming a platform. And if I'm right, this $150 billion company could 10x in just a couple years. But before I break down exactly how that happens, let's zoom in on AMD's latest earnings. Because on paper, it was a beat. But when you look closer, it wasn't just better than expected. It was strategic proof that AMD is building long-term dominance faster than Wall Street realizes. Here's what they reported: $7.44 billion in revenue, up 36% year over year, 96 cents EPS, crushed analyst estimates, forecasting $7.4 billion for Q2, despite an $800 million inventory charge tied to new export restrictions. That's important because even with global trade headwinds and tighter export controls, AMD isn't slowing down. Now here's what most investors missed. The real driver of this growth isn't gaming. It's data center and AI, which now account for more than 40% of total revenue. And that trend is accelerating. Their data center business alone has scaled from $800 million in Q2 2021 to $3.9 billion by the end of 2024. That's a 5x leap in less than 3 years. And it proves AMD is doing more than selling chips. They're earning trust from the biggest buyers in tech, which brings us to this. In Q1, Amazon bought 822,234 shares of AMD, an $84.4 million investment. Now ask yourself this. Why would the world's largest cloud provider, which already designs its own custom chips, suddenly go heavy on AMD? They didn't buy Intel. They didn't double down on Nvidia. They bought AMD. Here's what that tells you. This isn't a speculative trade. This is a strategic hedge. Amazon Web Services, AWS, knows that AMD's MI300X chips are finally in the wild. They know these chips are designed specifically for AI inference at scale, and they know AMD just shifted production to TSMC's Arizona fab, which means lower geopolitical risk, faster time to deployment, and easier compliance with US government contracts. Amazon's $84 million isn't just a vote of confidence. It's a signal that hyperscalers are preparing to diversify beyond Nvidia, and they see AMD as the alternative. Think about that. This is the company running a $1 trillion cloud business, building its own silicon, and still they're buying AMD. That should tell you everything you need to know. And the craziest part? Wall Street barely flinched. Let's talk about something most investors completely overlook, because the companies that actually become trillion-dollar giants don't just have great products, they build moats so wide that no one else can catch them. Warren Buffett calls it the most important thing to look for in a business. A truly great business must have an enduring moat that protects excellent returns on capital. So what does that look like in real life? Let me show you. Tesla isn't just ahead because they make EVs. Legacy automakers can make electric cars. Many already do. But here's what they can't replicate. 1. Gigafactory scale. Tesla controls its battery production, giving it pricing power and supply chain independence. 2. Vertical integration. Most automakers outsource their software. Tesla builds everything in-house. Battery tech, AI, powertrains, even chips. 3. Self-driving data. Tesla's FSD system is trained on billions of real-world driving miles. No competitor is close to that level of real-time training data. 4. Software margins. Tesla makes recurring revenue from FSD subscriptions and software upgrades, something Ford and GM can't do. You can build an EV, but you can't recreate Tesla's flywheel. That's the moat. Apple isn't just winning because of sleek products, but the real reason no one can touch them? 1. Everything is connected. iPhone to Apple Watch to AirPods to Mac to iCloud to App Store. Each product makes the next one more valuable and harder to leave. 2. iMessage and FaceTime. Social pressure alone keeps people from switching to Android. 3. App Store and developer ecosystem, Apple takes a cut from every app, every subscription, every transaction. It's a money printing machine for security and privacy. Apple's position on user privacy gives it a durable brand moat in a world where data is currency. You can make a better phone, but you can't beat the ecosystem, and that's why competitors fail to steal share, even with similar or better specs. People think Amazon wins because of Prime shipping, but the real moat is everything behind that promise. 1. Fulfillment network. Over 1,000 fulfillment centers globally. Good luck replicating that. 2. AWS. Amazon doesn't just sell cloud services, it powers the entire internet. Netflix, Airbnb, Zoom, all built on AWS. 3. Data flywheel. Every purchase, click, and return feeds into Amazon's recommendation engine, pricing strategy, and inventory control. 4. Prime ecosystem. Over 200 million Prime members worldwide. That's recurring revenue, predictable cash flow, and built-in retention. Competing on price or selection isn't enough. To beat Amazon, you'd have to rebuild everything: infrastructure, cloud, loyalty, logistics, from scratch. No one can do it. All three of these companies have something that looks invisible from the outside, but it makes them unbeatable from the inside. And that's why moats matter, because moats let you defend market share, expand profit margins, scale globally, and keep competitors locked out, even if they have similar products. And right now, the company with the strongest moat in AI, it's not Apple, it's not Amazon, it's NVIDIA. Right now, NVIDIA dominates AI not just because of hardware. In fact, their chips aren't even the fastest on paper anymore, it's their software stack, specifically CUDA, that keeps them on top. CUDA is NVIDIA's proprietary platform that developers have been building on for over a decade. Every major AI framework, TensorFlow, PyTorch, Hugging Face, has deep CUDA integration. So if you're a developer training large language models or inference systems, you optimize for NVIDIA because that's what works. But here's the problem: that creates lock-in. If you want to switch to AMD, it's not as simple as plugging in a different GPU. You have to rework your code, rewrite layers, re-optimize libraries, and that friction, it's what's kept AMD from gaining serious AI mindshare until now. Because AMD just filed a patent for what could be their most important innovation yet: a dynamic instruction translation layer. This is a software layer that sits between your application and the AMD hardware. Its job is to automatically convert code that was originally written for NVIDIA's CUDA into instructions that run natively on AMD GPUs. In other words, no rewrites, no retraining, no downtime. You keep using your existing tools, frameworks, and pipelines, and the software takes care of the translation. It's like if Android could suddenly run every iOS app perfectly, without any changes from developers. This doesn't just remove friction, it breaks NVIDIA's moat, because now developers aren't locked into CUDA anymore. They can switch to AMD without switching anything else. And here's where things get really interesting. This kind of layer isn't just a theoretical idea. Google's been using similar abstraction layers and tensor processing units, TPUs, for years, so have Apple's M-series chips with Rosetta. Even Intel has flirted with this kind of compatibility bridging. But AMD is the first to do it specifically to break into AI GPU workloads at scale, and here's why it matters financially. Let's say you're a company like Meta with tens of thousands of GPUs optimized for CUDA. Switching to AMD would have cost you months in retraining and optimization, plus developer hours. Now you just drop in new hardware, cheaper, faster, more available, and let the software do the rest. That's not just a small improvement, that's $1 trillion unlock, because it turns AMD from a hardware company into a platform, and platforms scale differently. With this one move, AMD can expand their TAM, not by selling more chips, but by absorbing all existing CUDA workloads, and they're already laying the foundation. Their chiplet architecture makes it easy to scale up compute power across a wide range of workloads. Their partnerships with Microsoft, Meta, and Oracle prove they're already being taken seriously in the enterprise AI space. Their MI300X is already shipping, and the MI350 is on the horizon. But the real multiplier, the thing that could 10x their value, is the software. Because this isn't just a patch, it's a strategic assault on NVIDIA's core advantage, and no one's pricing it in yet. Investors are still caught up in free cash flow fluctuations, in export controls, in short-term sentiment that ignores long-term trajectory. They look at Nvidia and see a juggernaut. They look at AMD and see the cheaper option, but they're not looking closely enough. AMD isn't playing catch-up anymore. They're building something fundamentally different, and the market hasn't caught on yet. When it does, you'll look back at this moment and realize the opportunity was sitting right in front of you, because trillion-dollar companies don't just sell great hardware. They make adoption effortless. They remove friction. They become the default. And AMD is now positioned to do exactly that. So if you want to see how I'm preparing for this shift and the tools I'm using to take advantage of the AI revolution, I've got everything linked below. And if you made it this far, comment AMD trillions, so I know you're one of the few who actually gets it. I'll see you in the next one.